Hello everybody and welcome to the weekly wrap from Forex Live today. It's Sunday 10th of July. A look to the movements last week and more importantly a look to the next week and some trading opportunities we might like to take advantage of. The first chart we're going to look at is the S&P 500. This is our benchmark equities market that we look to as an indicator for risk aversion or risk appetite. And you can see after a strong bullish run the week before, we had some consolidation and again more strength, followed by a sell-off on the back of some really poor non-farm payrolls figures out of the US, counteracting the good figures on Thursday. It did sell off quite sharply, but then was bought back later on in the session. So it ended up down, but not as big as one might have expected. Similarly, on Friday we saw further strength in the commodities market. This is the gold chart, so you can see gold having a very strong week and clawing back some of those losses from the previous 2 weeks. Now, if we keep this in mind when we look towards our Forex charts, beginning firstly with the euro. So in last week's video I mentioned being at the top of this triangle range with a good chance of it trading back towards the bottom of the range. It did attempt a breakout early in the week, but very quickly came straight back into the range. A nice trading opportunity there. So going forward, this range is the range to continue playing until you see a breakout and some consolidation, or perhaps a breakout and a retest either side of this triangle. You can see this small green candle here was on the back of the ECB raising interest rates by 0.25% on Thursday, and also some comments from ECB President Trichet, where he mentioned that even though Portugal has been downgraded to junk, the ECB has decided that they will be accepting junk collateral, no problem. So they've basically removed, or they're looking at a country's credit being viable irrespective of their rating. So probably not the wisest decision, but hey, this just tells us how seriously they are taking the risk that these sovereign countries, the sovereign debt situation in Europe is, and how seriously they are at avoiding a default, avoiding contagion at all costs. So that gives us a bit of insight into how to trade perhaps the euro based on some of the ECB decisions, knowing that they are going to be taking these decisions and they are going to be very lenient on these countries. So anyway, the range is what to play here in this triangle. It was a good trade for the week. We're nearing the bottom of that again, so setting up for another possible entry. Dollar Swiss, once again, the same as we've been saying all along. It's still sell the spikes on Dollar Swiss. First resistance that will need to be broken and consolidated above is this here at 85.40. You can see it's been attempted 1, 2, 3 off at least 4 times, and this line has been defended. This means that bears are very confident. They have the confidence to really aggressively sell into any rally. You can see any rally up towards this line has resulted in either a big red candle or quite a significant series of red candles. So once again, it's the play. Also, this non-farm payroll figure on Friday that was so bad. In times gone by, you could have possibly seen some strength for the US dollar on such a bad figure for equity markets. However, the market now sees this as an indication that the US economy is growing at an even slower rate than perhaps it is believed to be by many. So perhaps any raise in interest rates, any raise in yields, any US Treasury yields is further off than originally thought. Perhaps the possibility of further quantitative easing, more monetary policy from the Fed, QE3, the possibility that it will happen is increasing. So this is why we're not seeing any risk aversion money heading towards the US. I'll show you a couple of currencies later that really highlights that, but this one does a good job of it here. The Swiss franc being a safe haven currency, and on Friday, the dollar really selling off against the Swiss franc. So that's a sell on all spikes until you see a break, close, and consolidation above 85.40 at the moment. Okay, cable, let me just zoom out a little bit. Okay, so originally we were trading this channel here, and then early in the week, as was mentioned live in the video of last week, because the video was done on Monday with the markets open, we basically said go short now, and you can see it has worked out very well. There was also another chance the next day where you could have perhaps got short, but it didn't quite really retest that channel. All the way down to this support line here. So on Friday, once again, with the big risk aversion move, generally you would expect to see cables selling off, but in actual fact the opposite is happening in our current environment. You're seeing strength for the pound against the dollar at the same time that you're seeing equity markets selling off. So this says a lot about the US dollar, and it's actually changed our minds a little bit regarding risk positions, but we'll talk about that in a moment. Cable, you see you have a big head and shoulders on this chart here, the neckline here, but at the moment it is being defended, and it's been defended quite a number of times dating back here to in March, and it's been defended again this week. So for now, further strength up to test the bottom of this channel again, possible short, back up into the channel, possible long, or weakness down and below this line, possible short. So cable becoming very interesting for us, as it has been for the last couple of weeks actually. Dollar yen also becoming interesting. So we've been talking about the range for many months, but you all know about that, so let's not go into it again. We know that there's a slow downward sloping range going back many months. However, we have now started a gradual uptrend here, and we have an ascending wedge with this 100 pip range. So we're seeing not a lot of movement, not a wide range, but it is there. So perhaps if you would like to start trading dollar yen, we have become more interested again towards the end of this week. We're seeing a little bit more volatility, a little bit more movement per day. So we will be playing this range and then any breakout of the range. So the reason I'm going on and on about ranges at the moment is because, as I said, the risk aversion moves are becoming a little clouded with the situation of the US dollar. To highlight this, let's have a look at, for example, Aussie yen. Okay, Aussie yen behaves just as you would expect a risk averse, risk appetite currency pair to behave. Look how it mirrors or correlates with the SPX. Strong, weak, consolidation, up, down. If we go back to Aussie yen, a strong, weak, consolidation, up, down. So this is a risk currency, the Aussie dollar, versus a safe currency, the Japanese yen. However, here we have the Kiwi. Now, we here at Forex Live today made a mistake with this currency, with this pair, by trying to pick a top here. We can see that now. So with this, once again, record high, and with this strength on Friday on the back of those terrible NFP figures, there's no way that we are going to be continuing to short this currency until we see, a real move down, and perhaps now we'd like to see a break of this ascending triangle or this ascending wedge that you have here. So for now, all shorts are off on the Kiwi, and also we will not be longing at record highs either. So this is the probably, I guess, the fundamental shift that we have made this week with regards to the US. Any bullishness that we did have for the US dollar, not that we had a lot, but it is gone. So we'll be continuing to take our short positions, especially the dollar Swiss. But these risk positions, Aussie yen, Aussie US dollar, Kiwi dollar, we're not going to be taking those until we see some sort of further downside. You can see here in the Euro Swiss, I know one of our members was talking about shorting this currency this week, and it has proved to be a very wise move. That looks to be heading for new lows again. So you can see that in this current environment, when there is a risk aversion move, the market's not looking to buy US dollars. The market is going back to the other safe havens of gold, of Japanese yen, and of Swiss franc. So keep that in mind this week, guys. Happy trading, and I'll see you all next week.